Alright, what's going on, guys? Welcome to the weekly technicals live session for December 17th, 2018. And we are looking at the economic calendar for the week. And I do want to kind of give you guys, a little bit of an overview. And I would not recommend going in the markets this week. So this is, a week where I will not be participating in the markets. I'll be pretty much out of the markets the remainder of 2018. But in terms of volatility and days to expect the market to be moving around for this upcoming week, I would be focused on keeping your trading between really Monday and Tuesday, to be completely honest. But if you look at the economic calendar, all of the news events don't start pouring in until Wednesday. So Wednesday, Thursday, Friday, we've got a ton of high impact news events. You guys can see all the red folders, and while that could mean high volatility, it is not the best time or best opportunity to trade. So I wouldn't recommend any of you guys going in the markets, but do expect some volatility for the week based on the news impact. So while it is the holidays, typically I wouldn't expect much volatility, and we could very well continue to consolidate. Okay, so they could really just kind of whipsaw it back and forth all week, and really not have a clear direction at all. So keep that in mind, and I really would recommend staying out of the markets. I don't know how many times I could say that, but trust me, it would be very much worth it to stay out of the markets and observe. And if the markets do move a lot, oh well, you're teaching yourself patience and discipline for waiting for the setup, and you're allowing yourself to stay out when the markets are actually moving, which may seem like a bad thing, but it's actually a good thing because it teaches you that discipline and that patience required to wait for your setup that is high probability and more likely to pan out than something, just because you want to take a trade. So keep that in mind, and really keep an eye on the charts Wednesday through Friday, because we will likely see, some volatility between the markets. Again, may not be a clear direction. We may just move back and forth, take out the stops above the market, take out the stops below the market. So be aware of that. But, do understand that we do have FOMC on Wednesday. So typically with those type of weeks, we already expect some crazy type of price action. And with it being, the end of the year, holidays, all that stuff, we could definitely see some nasty price action this week and clearing out both sides of the market. So with that being said, let's go ahead and jump into the technicals portion. And we are now looking at dollar index, and I do want you guys to check out Friday's daily candle. So if you look at the high of the day, it came in at 97.71, and we've been targeting the liquidity here at 97.70. So we finally poked our head right above that. Now we haven't closed above it or anything significant to really insinuate to me that we want to go higher. While I do still think longer term they're going to go higher, based on this candle for Friday, it seems like they could just hold this thing in a consolidation. But again, if we close above 97.70, I will be looking for that further continued bullish trend. So I'm not bearish this market or anything like that. We're just stuck in a consolidation. So while the market did pan out and give us the level we were looking for, we are still overall in a consolidation. Okay, now if this Friday's candle would have closed above here, that would be a different story. Okay, but as of right now, we're below 97.70. So until we get above 97.70, I'm really expecting the market to consolidate. Okay, now the levels it can consolidate between is within the swing. So this low to this high. Okay, I don't expect the market to really break out of this at all. So for the end of the year, the market will likely consolidate within the range of 97.70 down to 95.70. Okay, so it's about 200 pips or so. Now, because of the fact that this is 200 pips, don't go in here trying to take a bunch of trades. Wait for the market to confirm the direction on, whether or not it's going to go up or down. So if they close above 97.70, then you can start looking for your buy setups and look for a continuation higher. But based on the price action, I don't personally think they're going to give us, some type of crazy bullish move at the end of the year. Now, that could very well happen. I don't want to say, oh, it couldn't, but if it does and we close above 97.70, I'll be looking for these relative equal highs at 97.90, so about 20 pips above it. And then from there, we have some liquidity built up above these highs, and we've got some more equal highs and relative equal highs back here. So we do have higher time frame targets back there, but we really need to see whether or not they can get and hold above 97.70. Alright guys, now we're looking at euro dollar, and same goes for this one here. We are stuck within a consolidation, and also, if you guys are wondering like why I'm possibly talking quieter, I don't know how it sounds on the recording, but it's like 2 in the morning over here, so my girlfriend's asleep. I just don't want to be too loud, so I'm trying to keep it kind of quiet, so excuse the silent session we're having here. But looking at euro dollar, I'm really expecting the same thing to unfold. Looking for a consolidation really between this swing. So we've got the 1.1220 level down here, and we've got the 1.1470 level up here. So that's about 200 and that is 250 pips or so, 250 pips. So that's really the range that we're working within. And again, we do look for things like this in the charts, so we do want to see similar ranges between dollar index and like foreign currency, for example, euro as this example specifically. But when you see that, it doesn't always mean you want to be looking for trades within that range. You want to focus on trading when the market's actually trending, right? So right now we're not trending, we're just consolidating. So for me, I would like to see us get down below 1220 and close below it, which at that point should, insinuate a continuation on the downside. But if we start pushing up and we come back above, 1.14 big figure, at that point I'll be looking for potential bullishness. Okay, that doesn't mean I'm switching my bias yet, but if we get back above 14 big figure, 1.14 big figure, that will make a higher high, and this could be a longer term low, and we could look for expansion to the upside. That's only if we get back above 1.14 big figure. If we stay below 114 big figure, we're either going to consolidate or trade lower for the 1.1220 level. Okay, so the levels I would be watching for and I would have on my charts are this high at 1.1470 and the low at 1.1220. So that'll basically mark out the range that we're consolidating between, and it'll basically give you an idea of the levels as to when you should start looking for trade setups. As long as the market's within this consolidation, you really shouldn't concern yourself with any trading, okay? And my opinion and my analysis is really expecting the market to consolidate between this range for the remainder of the year. Okay, so if we know the market's going to consolidate more than likely for the remainder of the year in between a relatively tight range with no predictable or high probability opportunities, why would we go in and put money at risk, right? And that's kind of my outlook on it, and why I wouldn't really go in and try to I would say maximize the amount of return you can make on the year. With 2 weeks left, you try to squeeze as much as possible. You should really focus on squeezing as much as possible during the high probability trending months, which for me, I consider those the spring and the fall months. So that's when I would be really going hard, focusing on finding a setup every single day if you can, etc. But right now during the holidays, if you get one good trade a week, I'd be happy with that. 20 pips, I'd be totally happy, and move to the sidelines after that, and don't really look for any further setups after that happens. Okay, but again, I would lean more towards the side of taking no trades at all, which is what I'm doing. So I would kind of recommend following that route versus actually, trying to test your skill set in one of the what I would consider to be the worst times of the year to trade, because during this time they're really looking to take anybody and everybody's money. So, I would focus on the times where the market is much easier to read. So when it's in a consolidation, there isn't much for you to work with. But overall, with our anticipated bullish perspective on dollar index, that should lead to weakness in foreign currency. So again, for me to see that weakness, I would want to see this market stay below 1.14 big figure. Alright, now looking at GBP USD, this has panned out perfectly from our last weekly technicals video. So if you actually missed the last weekly technicals, I uploaded that one to my YouTube as well, so you can actually check that out if you missed it, and really watch the video, because you shouldn't be doing much trading this week. So go back, watch the video, and then what you want to do is actually go see what unfolded in the charts, because if you didn't watch last week's video and you're watching this one, then you're not really gonna appreciate what actually happened within the charts, right? So I would really counsel you guys to kind of go back and see what happened last week, see what I talked about. So watch the video first and then go and pull up the chart and then look at this. But just so you guys know what video I'm talking about, it's the last video I uploaded to my YouTube. So it's Jrod4x weekly technicals, and it's the one that says 12/9/2018. So it was last week. All right, so what we mentioned in there is we had these equal lows, and I was looking for an expansion below that. Okay, so I wasn't considering the double bottom to be a low. I was looking for the market to trade through that and use that as my target. So as you guys can now see, we have traded below that with relatively large bearish candles here. So we had some nice volatility trading through that, and what we've now done is come back up and retested the level. So again, with our bullish bias on dollar index, I am bearish this market still. I'm not bullish GBP USD. I'm still bearish this market. There's nothing to convince me, or no evidence on the charts suggesting higher prices. So if you are bullish this market, I respect that, but personally, if you look on the higher time frames, I would definitely counsel you to take another look, because we are in an overall bearish trend. Okay, so macro view, higher time frame, long term, we are bearish. Then if you dial into what's going on now, high, low, lower high, lower low, lower high, lower low. Okay, so we are still bearish. There is no bullishness happening right now, up until the point that we come back and actually make a higher high. So let's kind of look at the daily again, see what level that would actually be. So if the market does in fact start trading higher, and we get back above this swing high right here, okay, so the high comes in at 1.2810. So we can put that on our charts, because we're going to want to watch this level and see whether or not the market can get above it. If the market can get above this level and close above it, at that point we can start anticipating further bullishness and potentially start looking for buy setups. Okay, but we're not going to be looking for anything up until the market gets above there and proves that to us, because that's just an idea. That will be the point as to which I'll switch my idea from bearishness to a neutral standpoint or bullish. Okay, because if I'm neutral, that basically means I don't know what the fuck's going on, and I'm like, okay, I'm sitting out. So if I'm bullish, that will be determined once we get back above 1.2810. Overall, until that happens, I'm still bearish this market. Alright, so my first objective for the downside, I will be looking for this low at 25 big figure. So 1.25 big figure will be the first target, and that's about 110 pips on the downside. Now, while I would love to see that, with the holidays, with the end of the year, just like everything else, I am expecting this thing to potentially just consolidate, because in my opinion, we've taken out the lows now. So anyone that's been bullish, they've cleared them out. Okay, so I just don't, I can't accurately say, hey, it's going to go higher from here. But the fact that we have taken out all this liquidity is interesting to me, but I can't be convinced that it's actually going to want to go higher until we get back above and form a higher high on a daily basis, which that first higher high really would be once we get back above 1.27 big figure. But I'd like some more confirmation, which would be back above 28.10. We get above there, I think we'll start pushing up and looking to trade for these highs back here. Okay, but only once we get above 28.10. As long as we're below that, expect lower prices and have your first target at 1.25 big figure. And for Euro GBP, next target I'll be looking at for this one here will be 91 big figure. So on the daily time frame, we've got the liquidity resting up here. We've had this nice move up and basically taken out all the liquidity in here. So I'll be looking for a further continuation on that to take out 91 big figure and start to trade higher up into the 91.20s and so on from there. Okay, so if we can really get some strength and start getting above here, longer term I'll be looking for the 93s and so on if we can really get some strength in euro. Alright, and dollar yen. So this one here, again, I keep repeating myself, but just like everything else, guys, consolidation. We're kind of stuck in here. We're in a range, and we're not really forming any type of logical trend, right? So to me, it looks bullish, and that's just my honest opinion. To me, it still looks bullish. I don't see that we would want to, start just selling off from here, but this one, I don't want to say I have the best read on dollar yen all the time, because I really don't. I had a nice swing trade on it not too long ago, but I don't want to say that this is my bread and butter, because it's not. I preferably, I really would prefer only looking at euro or GBP, which I do for the most part, but there are times where I do take a look at this one, but I do mention it every single week for you guys, just for those of you that may trade it. I want to kind of give you my analysis on it, what I'm looking for, and see if that could potentially provide you some value or insight into your analysis. And then if so, I think that's worth it for me to actually go over the chart. So that's why I still include it every single week. Otherwise, I wouldn't even go over all the pairs that I go over. It's just mainly for the people that do trade those. But for this one here, we're just in a consolidation, guys. I don't have anything that I want to tell you to really focus on, but with my underlying bullish bias, I will be looking for higher highs to continue to form. So I'll be looking for 114 big figure, 114.30, 114.50. Again, same levels as we've been looking at before. But the real indication on whether or not we can continue higher will be if we can start making some higher highs. Otherwise, we'll start trading lower, because we've got some relative equal lows here, pretty equal lows here on the daily. So we could definitely come back down, take out this liquidity, and then start trading higher. But as of right now, I'm still remaining bullish with my underlying bullish dollar index, but really there's nothing to be too concerned with on the bullish or bearish side, based on the fact that we're really just consolidating. So we'll see how the market actually moves this week. We do have all those news events, so we'll see if we get some volatility. Maybe there'll be a little bit more clarity, but next week is Christmas, so these remainder of the 2 weeks, again, just stay real light. I don't want you guys to go and blow your accounts at the end of the year, right? You got 2 weeks left. If you've made profit, take it out, enjoy it, or keep it. Let your account build up. But just the worst thing you can do, in my opinion, is go and put that money back at risk at the end of the year. So again, I would urge you to be cautious when looking for setups or anything like that at this time of the year. And again, that is December, going into the holidays. So the first like 2 to 3 weeks before the holidays, you really want to dial your trading back a lot. So for this, again, while I am bullish, I don't necessarily have a clear indication whether or not they're going to want to keep continuing higher or just kind of sink it lower. With the time frame that we're in, I think we're just going to continue moving back and forth and consolidate sideways. Australian dollar, this one here looks to me like we are obviously going to continue lower. We've had a tremendous sell-off here, had a nice little pullback, and then further rejection. So 1, 2, 3, 4 days up, and then one day took out all 4 of those days with a big bearish candle. So I don't necessarily think we're going to push higher here, in my opinion. I think we'll start trading lower, and I would just say look for lower prices on Australian dollar up until the point we get back above this high, which would be 72.50. Okay, but as long as we stay below 72.50 for this, we really should just continue trading lower. And I would be looking for lower lows to form because we're looking for a relatively strong dollar. So if that's the case, we should start seeing foreign currency fall off. And again, that doesn't have to happen by the end of the year. But 2019, if we can really start gaining some strength in the dollar index, we should start having some real weakness in foreign currency. So I'd have this level on your chart, guys, 72.50, and really keep an eye on whether or not we come all the way back up and make a higher high, or if we stay below that. And from there you can just kind of aim for either lower lows if you can find a logical sell scenario, and look for lower lows on a lower time frame. And again, stick to about 20-25 pips or so as your target. And if you get that, then hop out and say, pat yourself on the back for getting a nice trade, in one of the least likely profitable times, I would say. So you shouldn't account or really pat yourself on the back if you do get a winning trade during this time frame. You shouldn't really give yourself too much credit, because oftentimes if I have a solid trade during the holiday months or anything like that, I would account it more to luck versus actual skill. And the reason I say that is because the markets are just very unpredictable during this time frame. So technicals aren't really in line as they are during the prime months like fall or spring. So just I hate to keep saying this stuff, but I just want you guys to really understand the importance of not trading during this time frame. It's very, very, very important. Otherwise I wouldn't keep talking about this. I don't want to repeat the same thing. But for New Zealand dollar, just like Australian dollar, guys, we should expect lower prices for this, and my first target will be the nearest daily low here. So we've got liquidity resting below 67.50, and I'd really like to see this market continue pushing lower, because we've come all the way back up, cleared out all the liquidity over here, and we've had a nice rejection. So I think we're going to continue lower, and for that target objective, I'll be looking for 67.50 as my first target, and then I'll be looking for 67 big figure, and then so on. Okay, but as of right now, you should be looking for 67.50, then 67 big figure on the downside for New Zealand dollar. Alright guys, and dollar CAD, this thing, now that we've taken out our liquidity above 1.3380 here, we're really kind of stuck in a consolidation like everything else. But I think this thing is gonna really want to start expanding higher. We've got some liquidity resting above 1.3550, and we should really get some some real strength on dollar CAD as long as dollar index keeps pushing higher. I don't really see this thing turning over and going lower. If you look at this push up, we've had a very strong uptrend, so there's really been no willingness to come lower at all. We've had some solid retracements, but nothing really drastic to come back and take out some liquidity. So with that being said, I think we should just really continue trading higher from the current price of where we're at now. I don't really see them wanting to go lower from here. So they're either going to hold a tight range and consolidate, or they should, kind of let it loose and start trading higher. And it'll really be interesting. Pretty much the only day I'll probably look at the charts and be watching this week will be Wednesday for FOMC, because I'm curious to see what they'll do with dollar index, on whether or not we'll get some strength, or if they're going to sink it, or just really give us an ugly, nasty back and forth consolidation, running both sides of the stops on the market. So I'm curious to see what we get there, but other than that, I don't really have anything to be too focused on for this week. Also, as mentioned, to those of you in my premium group, I do have a friend that's in town from Canada, so he's got a spot, and a few of us are meeting up there in Venice Beach. So that's where I'll be spending the majority of my week. I'll be heading out there tomorrow and be sleeping out there for the remainder of the week. So that's also another reason why I won't really be too focused on the charts, because my head won't be fully in it. I will be kind of hanging out with some friends and things like that I haven't seen in a while. So it will be nice to catch up, especially during the holidays, with them. And this is how I like to plan my year out. So I like to do things typically that I don't often get to do during the year. So because 11 months, really 11 and a half months out of the year, I'm operating in the charts, and those remaining 2 weeks or so, which are now pretty much the end of the year, I like to really just kind of like reset my mind, really just go outside, go outdoors, like enjoy nature, just really take in the outdoors, since we spend so much time at the charts, or I spend so much time at the charts in front of a computer. It's good to really like get back in tune with like real life. So I would suggest that to you guys as well, especially if you've been super active in the charts all year and everything like that. You really want to have that time to kind of reset and just recoup and get in a good space for 2019. So with that being said, guys, for dollar CAD, there's really nothing else for me to talk about other than the fact that we should continue higher. First objective will be this 34.50 level, and from there we'll be looking for 35 big figure and so on. But we really have to start breaking up. I don't want to see them start pushing lower. But that's it for the weekly technicals, guys. I'm gonna go ahead and wrap it up here. Again, I hope you guys definitely take my advice, and I hope you stay out of the markets this week. If you don't, and you do take a loss, or even if you have a winner, make sure to journal it. Really understand the context. How were you feeling during the actual trade? Were you stressed out? Were they working both sides of the market? Did you think you were going to did you regret taking the position? All those things you want to kind of analyze the specific trade itself, and ask yourself those questions, because if you didn't have a good experience, then obviously next year you shouldn't do the same thing. And I'd counsel you guys to do that if you do actually go in the markets and take action on your own. But again, I would stress the fact that you guys stay out and really focus more on your study. And if you don't know what to study, like I said, go watch my previous weekly technicals, my previous daily technicals, anything you can find on my YouTube, and go in the charts at that specific time frame and see what happened, right? See, was I right? Was I wrong? What did I think versus what actually happened? Really do your research and actually get the information that's actually out there. And this is the best time to actually go and actually do that stuff, right? Because there are no real important setups or anything to be focused on in the charts. You have the time and the capability to go and really spend that extra time studying. So I would really counsel you guys to spend an extra hour, extra 2 hours these next 2 weeks. So that should be 2 to 4 hours you should have for just study, and just spend it in the charts, spend it watching a video while being in the charts. Don't just watch a video and call that doing work. watch a video, then go actually implement what you learned in the video, or go in the charts and see what was talked about in the video, and follow along on your phone watching it, and do it on the computer, or whatever you have to do. But really, make sure that you're actually doing something, because you don't want to just be doing nothing. Otherwise, you're never going to move forward with your trading. And I know most of you guys do want to continue moving forward with your trading, and oftentimes, you don't have to be trading to move forward, right? Believe it or not, you actually would learn so much more looking over the charts of what happened in the past than actually trading, because it's going to teach you the necessary things to look for when you're actually looking for your trades. So with that being said, guys, I'm going to end it here. Hope you guys enjoyed it, and hope you guys have a happy holidays. Enjoy it, spend it with your family, take time, go outside, stay off the charts. I'm not going to tell you again. And that's it, guys. Hope you guys have a great week, and I am out. I will talk with you guys next week on Sunday for the next weekly technicals. Have a good one.